Good evening and welcome back to Be Rich. Today I wanted to discuss a different topic, a topic on how professional investors make big mistakes. By professional investors, I mean big asset management companies which run mutual funds, venture capitalists, and so called great hedge fund managers. These are all supposed to be extraordinary investors who carefully analyze and make a decision and therefore are considered to be infallible. In fact, I did write an article in the Hindu on this. Let us now take the example of cryptocurrencies, which is considered one of the best asset classes for a long time. In fact, when people like me and Nassim Talib kept warning about cryptocurrencies, we were dismissed as old idiots who were not interested in looking at new technology. We were told that this technology would revolutionize and change the world, but would not but we would not listen. How this was magical and the returns would keep coming, and how cryptocurrency would change the world, would replace the dollar and all other currencies in the world. We were at pains to point out a currency has two basic functions. One basic function is to serve as a medium of exchange, and the other a storehouse of value. By meaning storehouse of value, it does not fluctuate too much. But the cryptocurrency bubble meant that the value of the currency kept going up all the time. Normally, when the currency keeps on going up in value, then the participants in an economic system will not use that as a means of exchange. What they will do is, because the price of that currency keeps on going up, they will stuff it in the pillowcases and keep quiet because they know it will be more valuable tomorrow. Thus, it can do only one of two functions. Either it can remain a storehouse of a value, remain where it is, depreciate slowly over a period of time, or stay where it is. For if a currency keeps on appreciating, then it cannot be a medium of exchange. This is fundamental economics. Somebody like me who has not studied economics in a proper format realizes this. And that is why even the Americans keep the dollar moving up and down, not in one trajectory. After a long time, the dollar is going up because the Fed is fighting inflation and is continuously increasing interest rates. If the Fed does not continuously increase interest rates, the value of the dollar will come back to mean. Over the last 100 years, the dollar has lost 90% of its value. It's only illusionary that it is a storehouse of value. Thus, a cryptocurrency should remain pegged to normal currency and retain its value if it has to be a proper medium of exchange between two people. Thus, to call it currency would be an oxymoron. But that is not the topic of our today's discussion. Today, I want to ask when it was glaringly error, when there were such glaring mistakes, why did so many professional investors take their money and pour it into FTX? How did storied funds like Sequoia Capital, the TESMAC, which is Singapore's state owned fund, then, third point, Michael Loeb's big investment hedge fund and other big storied investors put their money in Sam Bankman Fried, a young kid who was only 30 years old. What did they see in him that they poured their money into it? The answer is very simple. They were suffering from what I call FOMO, that is, fear of missing out. Sam Bankman Friedman himself explains this in an interview. He said, "None of these venture capital funds or hedge funds do great research. They are very greedy for the amount of fees that they generate and how much of profits they can make, and through which they can collect more fees. Thus, when this happens, then what happens, like what the famous English poet Taylor Coleridge said, there is suspension of disbelief. Normally, a professional investor is one who is supposed to be skeptical about any investment. He should start with a no and find out what all is wrong about an investment before he puts his money. But in a big, wild bull market, everybody suspends their disbelief and is willing to believe any untruth that is peddled. And the market in euphoria keeps moving up and up. And that is exactly what happened in the crypto world, especially in FTX, because Sequoia Capital buffed it up and kept on saying that this was an investment that could not be missed. In fact, in a profile of Sam Bankman Friedman, which was put on Sequoia Capital's website, it was boasted that when he was making a pitch for millions of dollars, this man, this young kid, was playing a video game called League of Nations. That means he was more interested in paying League of Nations than paying attention to what Sequoia Capital was doing. Or he was never scared that Sequoia Capital would not bother to worry, would not bother to invest in his company. Such was his arrogance. But Sequoia Capital was undergoing FOMO, that is fear of missing out. They did not want to miss out on the next big thing, and they wanted to be the first to get in. The kid had mastered what the venture capitalists thought, and he himself, in one of the podcasts called On Old Road, said very clearly that it is reasonable to assume that more than half of these cryptocurrencies in the world could be valued at zero or would fall to zero. None of the big storied investors who had invested in his firm looked at that podcast and set out a red flag asking why is he saying this. The new CEO who is now presiding over the bankruptcy of this company, FTX, said this company does not have any audited financial statement. How come so many private VCs who are paid billions of dollars to manage people's money decided to invest in a company which does not have audited financial statements at all? The first thing any banker or any investor, even a novice investor like me, will like to check first is whether there is an audited balance sheet. The claim of the regulator, of the new CEO, is there is no audited financial statement. In fact, nobody in FTX has a list of accounts, has a list of bank accounts held by this company. That means there is no record of how many bank accounts were opened and where the money was placed. In fact, some 6 months ago, the head of FTX USA tweeted that the money of FTX was deposited in bank accounts which had the guarantee of the Federal Deposit Insurance Company. Later, warned by the US Central Bank, this tweet was deleted. When such warning red flags were fluttering all around FTX and Sam Bankman Friedman, what is the reason why these companies invested? These companies invested because other companies had invested and were making returns, and therefore the returns of the competitors would be better than their returns. This meant two things: that they would miss out on their incentives and bonuses. Also, it would mean that money would move from their fund to the funds which was supposedly performing better. These two were major causes of incentives. As Charlie Munger pointed out to us many years ago in a Harvard lecture, that incentives is one of the main reasons why people do stupid things. So when I'm incentivized on based on short-term results, I'm willing to suspend my disbelief if I am not going to make my money this year, because those who had not invested in cryptocurrency would have lost a lot of money over a period of time and they wouldn't, though you lost a nominal, those who had not invested in cryptocurrency would have not lost money, but would have not made paper profits. And because they had not made paper profits, they would have not got their incentives and bonuses. Because the incentive of the bonuses and the monthly performance in bonus was so high that they were willing to suspend their belief and willing to believe that SBF was capable of doing everything. Though a large part of this blame will be assigned to SBF and he may spend more than a decade in jail, but the cause for this crisis is not only SPF, but there is the greed and the incentive that professional fund managers get. And because of their greed for incentives and bonuses, they are willing to suspend their belief. As long as that is not corrected, more and more of such cases will come up every day. Thank you for watching Be Rich. If you like this video, hit the like button of this video, subscribe to our channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. It is not enough that you subscribe to our channel. I would urge you to persuade your friends and relatives to subscribe to our channel. Once again, I thank you for your support for Be Rich. In the first week of December, between 8th and 12th of December, I plan to be in Muscat in the Sultanate of Oman. Those who would like to see me in Oman can get in touch with my team. There's a WhatsApp number given below and there's an email ID also given below. So those desirous of getting in touch with me at the Sultanate of Oman, especially in the city of Muscat from 8th to 12th of December, can definitely contact me there. I hope to see you all in Oman soon. Thank you for watching. Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.